things that you might have questions about or want to deal with, and trying to help you out as an effort to maybe lend some understanding to some of this thing that goes on in condos. I'm not sure you can do that sometimes, but we make an effort. My name is Mark Breckbill. I'm a licensed community association manager and a CPA, and have been dealing in this industry for about 20 years now, maybe 25, and handling accounting issues, management issues, and other issues relative to condos and HOAs. Normally with me on Monday mornings is Peter Mullengarden. He's our attorney, and Peter's been doing this work for about 35 years, and he and I have been doing this show for about 16 or so, and we're trying to help out. Peter's out of town, didn't get back in yet this morning, so I think he's going to be back next week, but I did want to mention that we still will take calls and try to help you out. And if it's something I can't answer, certainly we'll get back with you. I'll get with Peter and we'll get back with you. One of the things as we always say in the morning when we talk about the show, it is a call-in show. It's a customer, community service program. So we try to help, but we don't have your documents. So we have to caution that sometimes we can't give you a complete answer because we don't have your documents, but we'll give you the best answer we can. We call them radio answers. It means we give you the best answer based on law, statute, common practice, and those kind of things. But realize that if you've got something that maybe needs to go to court or something, that it may be one of those things that you need to meet with Peter or myself and bring your documents in, and we'll take a look at that. So the other thing is that we don't need we don't need your actual name, and we definitely don't need your association. The name is just to call you something. The association reason we don't want the association name is not that we don't care about your association, because we do, but some of the other listeners, when they hear the association name, may think, it's not my problem, so tune out. And as many of you know that are regular listeners, a lot of these problems are regular problems, so we have to deal with them all the time. Anyway, that's the intro. That's my spiel. But we have our first caller this morning. John, go ahead.
Hi, good morning, Mark. Are you currently a property manager? I didn't hear that.
Yeah, I have a license. I'm a licensed community association manager. I don't do that. My son actually has a property management business, but I don't. I'm not currently practicing the property management side, but I do.
So there's no way you could be my property manager. Is what I'm getting at.
No, there's no way I could be your property manager. My son could be, but I can't be.
Now I know Peter, you mentioned, is gone, and this might have been on his side, but I'll run it by you.
Okay.
I just have two questions. The first one is, our president wants to resign. We have an election next month, but he's not up for election this year. Our docs aren't that specific about this.
Okay.
And if he wants to resign, can he make it effective the date of the annual meeting when the election is, so that we can put, currently we have only 2 openings. Could we add a name if the board at our next board meeting puts it on the agenda to vote for that? Is that, have you ever run across this? I guess what I'm asking.
Yeah, and actually there's 2 things here, and so I'm going to break it up. One is he's a president, and the other he's a board member. So I assuming he's wanting to resign as president and as the board member, correct?
Yes, both.
Okay. Because, and just in case somebody else has a little different situation, first of all, the president serves from board meeting to board meeting. So you could put it on the agenda, and at the next board meeting, the president could resign and you can appoint a new president. Or, you could have a situation where the board can remove the president. The president doesn't have to resign. The board, in a majority vote, could say, okay, we don't want you to be president anymore. We're going to elect so-and-so. But they cannot remove him from the board. But if there is an open board seat, now again, this can be document specific, although you indicated that, yours doesn't touch on this. Typically, what happens is if a board position is opened, the board would get to appoint the person to that position. You don't have to have
vote?
Yes, you don't have to have an election. And in fact, so I'll tell you the both sides of this issue as far as how I've seen it happen. One is the board member resigns early, and then let's say there's an election coming up. The board member resigns prior to the election, and then the association goes ahead and and has an election for the position. Now, in your situation, and this is typical, that position really technically isn't open for another year. It's not. He's got another year to serve as a board member. So again,
Exactly.
he could resign early, and the board could voluntarily decide to have an election if they wanted to do that. Most do not. It's hard enough to find people sometimes to serve. So typically, what happens is that he would resign, and the board would appoint, with a majority vote, would appoint someone to replace him on the board, and then also they would have to also figure out who they want to be president. Of course, it doesn't have to be the same person, so they can appoint somebody to fill out the term to the board, and then maybe the vice president wants to be president, and somebody else is going to be vice president. You can adjust all of those seats on a board basis with the officers, typically, unless, like I say, unless the documents say different, and that's usually like 1/10 of 1% of the time that'll be the case. Most of the time, the way I'm kind of laying it out is the way it works. So, again, if for the association to have an election, that would be unusual. If he's got another, or she's got another year and a half to serve on their term, he or she resigns, the board at the meeting can appoint somebody to fill the spot. They don't have to have campaigns. They don't have to allow. Now, my recommendation is that if that's going to happen, that you go out there and see if there's somebody who wants to, voluntarily and see who's interested in the position. But the board has the absolute right to appoint someone to that spot. And
I understand that. We just feel that since the election is just like 2 months away, since it's so close and he wants to resign, we thought it might be better for the whole community to vote for his replacement, even though they'd only be serving that 1 year term, and then it'd be up again for election next year.
Yeah, I mean, I certainly.
Have you ever seen that though?
What, that they have an election?
Yeah, then with my scenario that I just gave you, instead of the board appointing someone to serve out the remaining year.
Yeah.
Since the election's so close, we figure give the community a chance to elect a replacement. That's happened in communities you've been in.
Yeah, I mean, it happens. For example, in the recall provisions, typically that's exactly what happens. There's a recall and there's an election. The board doesn't get to appoint somebody to the position. There's an election. It happens. You just got to make sure that you're not beyond the period of time in which.
No, I know.
Yeah.
40 days.
Yeah. Mm-hmm.
Yeah. So that's why our next board meeting is before the 40 days, and they can put this on the agenda and put up another seat for the election, and the president can resign as a board member on the date of the election, the date of the annual meeting. That's not unusual.
Yeah, or the board member can resign right then, because they know they're going to be replaced by someone. So it doesn't make any difference. But if they want to serve out that term, they can do that. And then their election takes effect with their into their term takes effect with the election of the new board member. Yeah, that's really a good way to do it.
They're going to appoint somebody before the election. And to me, it's silly if there's only less than 2 months to go. The person that wants to resign can stay on. They can be at the next agenda meeting. But and my second question is a little more maybe to your side of it.
Okay.
If you had a property, let's say you ran a company, property management company, you might have in the past, and you have an employee who's a property manager in a community, and on the side they also are a private property management company in the same community, manager in the same community. Have you ever seen that scenario before, and would you consider that a conflict of interest?
Now, let me make sure I understand this. So they're a property manager, and they work for a property management company, correct? Or they have their own?
Yes. No. They work for a property management company.
Okay.
But in the same community, they've been here a decade, and over those 10 years, they've got private clients in that community.
Private clients from the standpoint of what, maintenance or something, or?
Yeah, like if they're snowbirds or whatever it might be, if they need, like they're investors and they need the place rented out, or if they need the place sold.
Okay, so one, they're a property manager, like a condo HOA property manager, and in the other, they're a property manager as in managing property for individuals.
Exactly, on the same location.
Okay. Well, first of all, technically, if you're managing property for an individual, you have to be licensed to do that, and I don't believe the CAM license covers that. That technically is a license through the real estate side, but
and they have a real estate license.
Okay. I just want to make sure. So that's the first thing, because people get confused sometimes. But the property manager license for CAM does not cover, private property management.
Okay.
Would
a real estate license cover that?
The real estate license does. Typically, it covers that.
Okay.
And then but the CAM license would not. So now, is it allowed? Technically, if the property management company that the property manager works for allows the person to have side jobs, then the individual who's the property manager could have side jobs, and could perform side jobs in a capacity other than as their property manager. It would have to, technically, it should be outside the normal hours. It should be, done, it would be done on a completely separate basis. And the person would have to be fully licensed and insured. Is it a good practice? No, absolutely not. But
my question was, is it a conflict or the appearance of a conflict of interest?
Yes, it definitely is. But I guess what I'm saying is that they can do it, though. It is legal.
Yeah,
I'm just saying it is not a good practice because, it does create a conflict of interest. Let's say, for example, something needs to be repaired or there's a problem in one of those units. And at that point, the homeowner is claiming that it's the association's responsibility. And the association then is going to argue that it's the homeowner's responsibility. And they're going to ask the property manager to basically enforce that against a property that person manages and has probably told the owner, no, it's not your responsibility, or maybe had done the damage to start with. So is it a good idea? No. And is it a conflict of interest? Yes. Is it illegal? I don't think so. I think that as long as the property management company allows it, allows them to have side work and knows what that side work is, probably not. But
and the key thing is side work, meaning if you work 9 to 5, whatever you do before 9, whatever you do after 5.
Yeah.
But if you're doing it on the clock and you're getting paid by the association and you're conducting your own personal business on the clock,
that's a problem.
We fired 2 previous property managers before because of this.
Yeah.
But for some reason, this person has lasted 10 years. And, everybody says, well, go get a lawyer, and
yeah,
you know how that's a rabbit hole. But this time they're really people richer than me in the community that know much more powerful friends that I know are seriously considering this because they've had enough after 10 years. And nobody watches the property manager every day. Nobody knows if they're doing business on the clock. That's why any appearance of a conflict of interest is enough. I mean, if they worked for the federal government, they would never get away with this because of the ethics code. Now, of course, does that say the federal government, there's not crooks in the federal? Of course there are. But
Well, and
they'd be fired for doing what I guess in the state of Florida there's no law against doing.
no, I mean it really is. It's going to kind of come out to a to an employment situation. So if I'm the property manager that employs that property manager, of course, I don't want that person stealing time from me and doing other work. So I'm not. I may.
What is that called, though? I mean, I don't want to use the word fraud, but I mean, if we're paying an association and they're, a property management company to manage our association, and their employee is doing stuff they're not supposed to be doing on the clock, and we're not getting our whole dime. What is that called?
It's fraud. I mean, it technically is.
There's no other name.
Yeah,
right?
I mean, it's people don't think of it that way because they usually think of stealing money. But if I steal time from my employer, where I'm getting paid for not working, that's the same as stealing money. So it technically is fraud.
Plus, they're exposing their company to liability through a lawsuit.
And it's either a misappropriation of funds or a fraud. If you're doing that kind of thing, it is illegal to do that without. I mean, if your employer said to you, "We expect you to be on site. We expect you to be on property 30 hours a week." Okay, so you're a full-time manager, but we expect you to be on property 30 hours a week. The remaining 10 hours, we don't care what you do. You can have a side job. You can do whatever. And in fact, we'll give you flexibility that on your 40-hour work week, you can mix in that time off, those 10 hours into where you're at. So if you want to take off and let's say you're going to handle real estate transactions for the next 10 minutes or 15 minutes or half an hour. And that's not that unusual. So I don't want to say that initially it's a problem, but when you're doing it, that's fine. If let's say I had a real estate license and I'm working under my CAM license for a property management company, and I'm only required to work 30 hours a week, and they're only paying me for 30 hours a week. So as long as I work the 30, they're okay. They don't care exactly how many hours and when and where I work them. If I also had a job as a realtor and I'm making calls to my clients and that kind of thing on my time, even potentially selling a unit within the association, that's not necessarily a conflict of interest or a misappropriation of funds because I'm on my own time. I'm doing my own work. What I'm talking about and what I have a problem with is that when you get into the maintenance side of that real estate, not the sales side, but the maintenance side, I have a little bit of a problem with that because of the potential of a conflict with the association at that point. And I think my employer would probably have a problem with that.
Yeah, and I agree. You have excellent examples, both examples. I love them. The only trouble with the last one, though, is it is kind of a conflict of interest because on Wall Street, that would be called inside information. I know that's a gray line as far as property management company goes, but if I'm a property manager and I know all the inside information inside my community that I'm managing, and I got a real estate license and I'm wheeling and dealing and renting and selling, to me that's inside information that other realtors might not have. And to me, that's not good.
But it's not illegal. I mean, and it's not really, it's technically not unethical. I mean, a lot of the associations around, we do have people that are, I mean, most of the associations, they have realtors that live there that specialize in their association for the very reasons you're talking about. So I understand what you're saying. But and
our manager has to work 40 hours. I mean, that's in the contract. So they don't even get those 10 hours to wiggle.
Mm-hmm.
But that was another thing you should, it's funny you should mention that because they weren't working 40 hours. They take off early or they leave early or they take a day off once a week. It's getting really nasty. It's just getting ridiculous.
I will tell you the other side of that though, John, and it's true in a lot of areas, but it's particularly true in this property management area. The property management companies are having an impossible time finding property managers.
Why is that?
Because there's just none out there, and the business is expanding, and there's a fair amount of business out there, and nobody is licensed. So they're having a hard time finding property managers, particularly since it's kind of tough, because if you're a small property management company, most of the property managers don't want to work part-time. So you got to commit to a full-time salary and a full-time job. So you pick up a new client, a new association, unless that's a full-time job for them. It's hard to find somebody who just wants to work part-time, and the other managers are pretty much maxed out. So the business has gotten tough. I've talked to a couple owners of businesses, including my son, but even some other ones that have kind of indicated to me that they've been out there aggressively hiring whoever has a license. And it used to be that the introductory property managers were getting probably around 42 or 45, but now my understanding is that they're starting them at with no experience at 50, 52, just to get them in. So
what does somebody with experience get?
Well, if you've got an experienced manager, and depending upon what the property is, 60, 65, 70, I'll tell you what they do.
I'm sorry, excuse me. Is that with a property management company, or is that with just a thing if you decided to hire a property manager alone?
Well, the property management companies tend to just turn over their managers. They tend to deal with, they would rather train them and pay them less. So, you see less of it. I'll tell you what you typically see is at the lower end, the 40, 45 to 55. A lot of those guys are working through property management companies, big property management companies, maybe even up a little higher than that, 60, 65. But keep in mind that when a property management company goes in and offers, they also include accounting services typically. So not all of the money you're paying goes to the manager. Some of it's going to the accountant and all that.
And the employees, and you lower your liability risk because you don't have to cover workman's comp. There's pluses and minuses. What do you think is the best? Would you prefer, if you had like a 300 unit place, would you prefer, if you lived there, a personal property manager that worked for the board, or would you prefer to get a company?
I don't. I think both work really well, depending upon what the attitude is of the association. I will tell you this: that if you've got an association that is very, very cost oriented, and and all of those kind of things, then you're better off paying a property management company and trying to get those costs down and maintaining them. So, because you won't necessarily have to have a full-time manager. In other words, with a property management company, they can provide a qualified person for less than 40 hours a week. But if you're at that point where you've got, and then they're also providing accounting talent and things like that. So overall, I think a property management and that method can tend to be cheaper. But service-wise, you get much better service, I think, from an on-site property manager that is, that is employed by the association, or is at least retained by the association.
I agree with you.
Now, I'll tell you what will happen on that. And this is kind of funny because we're coming full circle to what we're talking about. Those situations, you're talking about a person that's relatively entrepreneurial and has a lot of experience. So 60 or 65,000 isn't going to be enough for them. Generally, they're going to want to make other money. The association, 60, 65, 70 is most that they want to pay. So what they typically do is allow them to do other jobs. They let them manage other associations. So a lot of those property managers I know, they'll manage one large association and almost like their full-time manager, and then they'll manage maybe 4 or 5 small associations that they do anything from just bookkeeping work for, or they'll do property management work for, and then they'll make 90 or 100 ultimately, but it'll be, you're not going to make that with one association unless you're in a real high-end community. So
and what would be the top 3 property management companies in the area as far as size goes?
As far as size goes, you're probably talking about First Services Residential. You're talking which I think they're actually located out of Canada, but they have an office down in Boca, and then in
Jupiter,
North Carolina, Jupiter, and then in North Carolina. The biggest local one is Advantage Property Management. They're very large, and then beyond that, right now in this community, you've got some people that are coming in. Uh, there's Castle and Cook that manages some properties. They're a big here. They tend to manage primarily for developers, but they do manage some properties. They're pretty big. They're real
Are they
big.
high end?
Not high end. They're just like I say, they're very large, but no, not high end. They don't have an office here, so I think they manage. Like I said, they have a tendency to manage for developers. So before they've turned over. So sometimes but they do they do a broad range of stuff. They're bigger down in Miami and Broward County, but they're really large. I'm trying to think who else is out there that's really large. Those are the three that probably are the most prevalent in the market here.
And Bayshore, I guess, is in your area, right?
Do what?
Bayshore, I think, is up in your area, not unless they got bought out.
Yeah, I'm not sure if they've, if they're still around or not. Some of these have consolidated. There were a couple that were growing pretty fast, and then they got bought out and have gone away.
That's why I'm asking, because I was wondering if has there been a big consolidation, and apparently there has been, because a lot of the little ones are no longer here.
Yeah, there used to be, but what's happened too is some of the smaller ones, some of the smaller ones are starting to expand, like Signature is expanding. Coastal, Pinnacle is up here. My son's, which is C&M Property Management, used to be Jacob Management. That's expanding. So some of the smaller ones are just starting to expand, but many of them, wanted to get the people and procedures in place before they did that. So, and some of them didn't and have run into some problems. But in general, we're fortunate up here. There are some decent, there's some decent property management company. I'll tell you one that does, and they don't do property management, but the old Proctor Crook, Car Riggs and Ingram does accounting services. So, for example, let's say you get a manager who, doesn't do accounting. They can go to somebody like, Car Riggs and have their controllership division do the accounting work for them. Or Joanne Cadrew does a lot of accounting work for individual property managers. So we have that as an alternative too, is, you end up with a property manager who doesn't have the accounting background, so they can't do all of the work that you would need done by a property management company, but they can go ahead and bring in somebody like a Joanne or somebody else. And of course those people have to be paid to do the accounting work. So
that's a good point. Yeah, I like that.
Yeah.
And you're mainly though in the St. Lucie area there, right? Would you know any companies in the Palm Beach, West Palm Beach area?
I can go back and take a look. I do actually. And down further south. I know the people. I don't remember the company's names.
That's okay. I'm sorry. I didn't mean to put you on the
spot. No. But there's actually down in Broward County, which they handle clients up into Palm Beach County. There's a company, used to be a CPA firm, still does do some CPA work, but it's primarily an accounting, property management type business. A lot of it is accounting work, but they do a lot of they can help you find a property manager probably, and that's Carol Eskew's firm, Judah Martin Eskew, I think is the name of it. Carol used to work for the state. She was the financial person in charge of the South Florida for the state, for the bureau for a long time years ago, and then she left and went to work with Judah and with those guys, and they do that kind of work. There's also also a firm down in Fort Lauderdale, and they I'm trying to remember, but they were formed by a couple CPAs that used to do audit work and in the industry, and we're on the SEER committee and that, and they have formed their own. One of them is her name's Bennett, and she's been doing it for years, and I understand they've got a good firm. The funny thing is, a lot of this stuff right now, because of the electronics, a lot of stuff the property management companies are able to expand a little bit in terms of different areas. Because, like, for example, First Services, which does a lot of work here, their accounting department, I think their payables and everything is out of North Carolina now. So they have the ability, because everything's online, they have the ability to do a lot of that from that standpoint. But
Yeah. It's almost
still,
like doing it. Pretty soon it'll be India and Pakistan. They'll be sending their accounting.
yeah, you could actually, you could. I mean, from an accounting standpoint, it'd be that easy from from the accounting standpoint. The key to it, though, and that is, kind of just what you just hit on, and that is that it's the quality of your property manager. Ultimately, that's what you're hiring, whether it's through a property management company or it's individually. It's that property manager and their experience and their how they manage and how they care about your property and all that kind of stuff. You can put up with some of the other stuff, or you can find solutions to some of the other stuff, but it's hard to find. A lot of times, it's hard to find a good property manager, and so if you
I've heard commercials that sound like your show. I'm not sure if it's called Condo Solutions, but I've heard of some firm. I'm not sure if they just do accounting or if they do property management too. But there's an ad on one of the radio stations that advertise. I'm sorry, Condominium Concepts, I think they're called.
Oh, okay.
Have you ever heard of them?
No, I don't think I have. I'm not sure who that is, to tell you the truth. But they might be a new one, or it could be a spinoff. There has been some. Typically it was with most of these. It's funny, some of these companies up here, the guys that have been in this business have been in it for a long time, and have grown with the business. The guy that my son, partnered up with, Joe Jacob, he had been in this business for 25 or 30 years, and he actually was one of the original partners in Advantage with Lucky Shawver. So they had grown that business. So there's a lot of these guys. Some of the people at Signature were originally at Advantage. I know that one of the people that manages up at Johns Island, who runs it up there, Johns Island, she's originally from Advantage. So a lot of these guys are, they go with a firm like that and then move on. The big firms usually have non-compete, so it's pretty hard to hire their managers away. But ultimately, over a period of time, those managers go off on their own and are available. Out on the island, you've got a lot of people out there that have been managers for years, and they, some of the more experienced and high-end managers are out on the island, partly because it's
sweetheart deal.
Well, not so much. It's just you can focus.
Well, I mean, it's a sweet job. I mean, who wouldn't want to be out there?
So yeah, it doesn't want to be on the ocean. But I think one of the reasons that most property managers like it is because you can focus on service to your, exactly who your owners are. Exactly what they want. You've only got one set of documents, so you can generally provide a high level of management service that way. But
you become a specialist.
Yeah, but the thing that's kind of interesting with all of this is that the electronics now. My son, his business, what's
that called again?
It's called C&M Property Management. The C&M are Carter and Macy. That's my grandkids. That business, my son just switched over. It was very paper oriented before because it was kind of old school, but he's switched over to he's got a company called Appfolio that actually he's one of their sites in Florida. They're a large company that had primarily, believe it or not, provided property management services, the kind that you're talking about, the maintenance and all that kind of stuff. They developed a system for that to track it, letters and all that, and they've now modified that system to go into the condo and HOA world, and so it allows you to do all of these things electronically. So now he can, not only can you do the electronic banking and electronic checks and deposits, but he can go out on site. If there's an infraction out there, he can put the address in. There's a letter in the system that'll automatically send it out. If they've got the email address, it'll email it to the person, and they'll get the notice of what they need to do.
Yeah, I've heard of Appfolio. That is a wonderful tool. It saves a lot of time, I hear.
Yeah, and that's my son is one of only a few people that are using that or have been allowed to use that in the state so far. And he's the company itself is out of San Diego, I think, but he's got he was ramping it up because you got to get everything converted over and all of that. But he did that over the last year, and it's turned out to be a great it's a great system. It's not fully implemented because it takes a while to get everybody's email address and all that. But it is a great system, and it's all it's all electronic, and it makes everything a lot more efficient. The property manager can actually do property management rather than a lot of administrative stuff that you're paying for. So,
and with the website going on, as of January 1st, we're all supposed to have websites. We still don't have one.
Yeah,
I mean, we have one in the works. I guess they gave us an extension.
Yeah,
but I'm sure that helps them out there too.
Yeah, it does. They have, I think that they can, they can put one together for you, or they have the ability to put one together for you if you need to. They do it for all of the property managers as well. They have a website for them, so it's really pretty, it's pretty neat the way it works. And in fact, that's one of the advantages of the Appfolio is you can have passwords and areas for the associations, and they can log on, they can get their documents, they can get a lot of different things that right now they'd have to contact somebody for, and it's a whole lot easier to do that. So makes it easier to manage the properties.
You made me think of another question, if you don't mind.
No, go ahead.
Is there any way as a property manager that you can keep track of Section 8 housing? Because it's run, it's a government run thing. I mean, would I have to call a government agency to get that, or should the management company know? Because it should be on the application when they apply.
Well, technically, there's you get into the situation that you can't discriminate on housing, and so if somebody is
well, I understand the landlord can, as far as Section 8, the
yes.
association can, but
right.
just to keep just for informational purposes.
I would.
Is there a way to know?
I think that in a roundabout way you could, if you have a policy that your association, that you have to approve tenants, and you have to approve, the tenant that comes in, and if you do what many associations are doing, and that is in the leases, they're requiring either that the leases be modified or that there's an addendum or at least an addition that makes a provision that that in the case of a situation where the owner isn't paying, that that they can go in and take your lease payment. Most places are notifying the tenants on that. At that point, you would know, because you'd have to have the tenant sign off, and that would include probably the agency that was going to be providing the funding. If they would have to know, like Section 8 would have to know that those payments are being made, could have to be made to the association instead of to the owner. And
what agency is that?
What? Under Section 8?
Who supplies the funds? Yeah, who supplies the Section 8?
Typically, it's typically under HUD, but it's under, like, for example, here, the Stewart Housing Authority typically is, they've got a Section 8 program. And so
you would call the housing authority of your locality.
Yeah, and it'll be, if the person's using Section 8, the Section 8 people are going to review, the housing authority is going to review the leases, because they have to make sure. For example, a lot of people don't realize it, but the tenant, if they have damage to the unit, and they have any kind of damage, they can lose their ability to have future Section 8 housing money, because the housing association wants to make sure that there's no damages and all that. So if you incur damages, which they then may be responsible for, they you lose your right to Section 8 housing. So there's some provisions there. They approve all leases. They approve the terms of the leases and what's in it. So, I guess if you really wanted to, and you're in that process where you have to, review, you get a copy of the lease and the tenant, then you could make, you could at least record it on the front end. Now, here's the thing you don't know. That person could drop out of the Section 8 program. And they could say, okay, I'm got a job now. I'm not in Section 8, but I want to stay where I'm at. So their lease is still valid. But Section 8 might be off, the housing authority might be off of it at that point. So the easiest way to do it is to accumulate it when you approve a tenant. If there's any kind of unusual housing, you want to make sure, I mean, not unusual, but any kind of additional provisions from a tenant standpoint, whether it's a guarantor or anything else, you want to make sure that they understand that the association has the right to, potentially take their payment and demand that their payment be made directly to the association. So that's
something that we could put on our application. I mean, that's not illegal to ask that question. Would this be Section 8 finance?
I wouldn't ask that, but I would ask, is there any other party? I mean, it would just be part of the process, but is there any other party financially on the lease? So, for example, if there was a guarantor or whatever, let's say it's a young person and they may have leased the property, they may have entered into a lease, but they may not, they may not have had the financial strength. So the landlord may have required that a parent sign on it, or they may not have been legally of age. So, they may have required another signature. I would make sure that you get a copy of the lease and you see that. And when you see the lease, you'll know whether there's another party on it. And then, you can you could have the property manager track that. It's funny that you bring this up, because this actually was the issue that I was going to mention this morning. And it's not a big issue, but I was going to mention is that how much information should the association accumulate? I just went through a situation recently on a sale, and I owned a unit. I sold it. The buyer had been approved for financing, but they ended up with a situation that the buyer had been approved for financing, but they ended up with a situation that the unit itself, the association hadn't been approved. So what they wanted to do is approve the association. So they had which is common, they have these condo questionnaires that they send out to the association or the property manager, asking them these questions to sign. And one of the questions that they ask them to sign is whether they have different questions, but what they're really trying to get at is how many units are leased. But this one bank, and each bank has their own questionnaire, which I find ridiculous. But anyway, the one bank's questionnaire asked the question: how many units are owner occupied? How many units are investor occupied? How many units are second homes? Well, who knows that? The association doesn't ask that question. When you go to buy a home, they don't say, is this owner occupied? They might ask if it's primary residence, but even then they probably don't. Is this owner occupied? Is this an investor property? Is it a second home? Frankly, it may have been a second home and 2 years later becomes owner occupied. Or it may have been a second home and this season it's an investor property because you're going to lease it out because you're not going to be down here this season. So how does it, association can't keep all that stuff. So it's ridiculous for the bank to ask that question, because that's not information that the association would have. It would cost thousands of dollars to do a survey of your association every time you got one of those. So, because it would only be valid at the time you did it, because the next day the numbers had changed. So, I mean, I think some of this stuff is getting to the point that, how much information the associations are, should be required to maintain the situation that we were just talking about. John and I were just talking about is different. That's a situation where you're looking to, you're you're trying to find out what's going to happen relative to payment and things like that on a lease, who's going to be responsible. I think that's the association needs to know who's paying a lease if something changes, because they have, even though they don't have an interest in the lease, they do have an ability to get paid, and they want to make sure they make a notification if that's the case. But anyway, so there's some things like that, I think, that are more of a more of important to have. But the other side of it is some of these things, I think, are getting out of hand. These questionnaires on the financing side are just ludicrous. And here's the thing that irritates me. There's a handful of these banks that are actually, making these loans. These are all going through mortgage companies, and there's all some big bank someplace, whether it's Stearns or Flagstar or somebody like that, that's making most of these loans. And, you can't tell me they haven't approved, that they haven't gotten a questionnaire on this association before. So, there should be some procedure that Fannie Mae and Freddie Mac can get so they can get an association approved for at least a year. And then at that point, it doesn't have to be done again. And all of these property managers and all of these borrowers don't have to jump through, and these mortgage lenders don't have to jump through 1,000 hoops just to satisfy and answer the same questionnaire that was answered a month ago, which is kind of crazy. So anyway, it's just another one of those things that's just gotten out of hand because of the Banking Act and some of the regulations that have been put into play. Most of this stuff just causes a lot of this to grind to a halt, and it's unfortunate. And I don't know that it's the same thing with a number of other things on the lending side, that just some of these things are just ridiculous at this point. To go there. The one thing that was funny about this last one that I was dealing with is that the reason that they're asking for this information, the reason they're asking for this information is because the underwriter has a box that they have to check that says that here's what it is. They have to fill out a form. They check it off. They got the form. They're good. They're good. So they won't get sued. So that's all they're doing. They're not thinking about it. So here's the issue. I got a person buying my unit. My unit was an investor unit. I was leasing it. The person that's buying it actually is going to occupy it. But because of some extenuating circumstances in terms of qualifications on the loan, which was stupid as well, they could qualify easier as an investor than they could as a primary residence. I mean, that's just ludicrous. But anyway, because of that, they qualify as an investor on the thing. So now it's an investor selling to an investor, and the lender wants to know how many investors are in there. Well, I don't know. One's coming, one's going. So as of now, it's all the same. But anyway, but that's not the question that they're asking. They want to know that the form has been filled out. So as long as you fill the form out, everything's good. And then later on, when something goes bad, they've got somebody to blame, and they can sue somebody other than themselves for making a stupid loan or not doing their job. But anyway, all right. Well, we're running out of time here. I appreciate the calls from John and the conversation. That was a good conversation this morning. I appreciate it. And hopefully the rest of you out there, if you've got some questions and you enjoyed the show this morning, you'll tell some friends and join us again every Monday, 9 to 10 o'clock here on WSTU. We're going to talk again about what happens in the condo world. So join us right here on WSTU. We are your station for facts and fiction right here on WSTU Digital 1450, Martin County's Heritage Station.